The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician's Hour for the 21st day of November. Whoa, time flies. Well, welcome back to Tommy and the bunch, and a great program, and let's hope we can keep that up, going all the way through today till 5 o'clock. So the Dow is up 38 at 18,907 after this spectacular week, election week, spike to the upside. Taking a bit of a rest here, and the S&P is playing catch-up. That's fine. You got the E-mini up 8 at 2189. The 120-minute chart, this is very interesting. Look at this, these four charts right here. On my left, I've got the Dow Daily, leg B, very positive. In the middle, I've got the weekly. This is leg E/A. I really don't like that. I mean, E is negative and A is extremely positive. My bias right now is to think of it more as a positive going into year end. Could take all of the 6 weeks left, 8 weeks left, 5 weeks left. What am I talking about? 5 weeks left. So that's A, B. So it's A, B, C, D, E. You couldn't even get the end of the. It takes you to the beginning of January. That's the weekly chart, but the MACD hasn't crossed over yet, so I can't give. All I can say is E/A, and it's still becoming more technically positive, but it isn't yet. The MACD hasn't crossed over positively. Stochastic still at 68%. I want 80% or more. The 120-minute chart right here is in an E/C. This is a little bit easier to see. My thinking right now is that there will be a D to come because it's taken all these sideways rectangle formations. Look at that. Long formation broken out. The little yellow rectangle, long formation breaks out. So I think it's a positive. Dow's lagging a little bit. You've got the 500 S&P catching up. That's fine. So the support is at, look, let me do this 120-minute chart leads to the shorter term, a 10-minute chart, and that made a peak D. Remember, we talk about Ds all the time in the Chapman wave. What is that methodology all about? Gosh, I should have got that already. It says from an identifiable low bar, you should get at least a peak D to the upside. Look, we've got one little D there, got an D, and then it goes EF. Then you've got another peak D right there, another one right there going to D, pulls back, and now you've got a D this morning that went to a triple top at 2191.25. Did that for 3 consecutive 10-minute bars. That's not easy to do. Pulls back quite sharply to the 2185 level. Exactly, it was 2184.75. And now we're having a bit of a rally. I think there's going to be a rally that makes possibly an arch formation. But what's most importantly visible to me is that we're looking at a kind of a rectangle formation here that says a bias towards the upside for the moment. Let's see how long that lasts. Give you the parameters. A break under 21.8, we're at 21.89 in the E-mini 10-minute. A break under 21.84, very negative. A break above the high of 2191.25 is extremely positive going even into tomorrow. Now, that's the 120-minute chart. What's really exciting about all of this, and I showed my subscribers in the 13, 14, 15, I don't know how many charts there were over the weekend, going into this morning, that the monthly chart is really good. Look, this is a very strong leg C to the upside in the, this is the continuous contract of the E-mini, which trades exactly as the December contract would. All right, enough. Now let's go to the nitty. Dow up 39. It's got this little pattern here. It needs 18,935 to break out for a leg C, and went to 18,927.86, trying desperately to do that. It's got a couple of stocks there within the mix that are they've had a big move. They're taking a little bit of a breather here. I like the action in some of my Dow Quartet. I wanted to really leading. One is weak and one is very strong. So here we are with the Chapman Wave Inside Track technical tool that we look at, and that says right here is what we call a channel. It doesn't have to be a channel, a large one. This is just what we call an inside track channel. It's a technique I'll teach when I give my courses coming up. 3 courses starting in December the 6th. I'll get more into that a little later on. But right now we're in the resistance zone. That resistance zone, as I said last week, goes to about 19,000, maybe 120, and we're at 18,912. A break into 19,000 this week would be extremely positive. And look at that weekly chart. I love that candle. Month has still got over a week to go. Don't want to get too cocky about that. And the 120-minute chart has not made that extra leg to the upside, but look, also in a rectangle formation. It just says right at this particular moment, the upside's a little bit limited, but so is the downside. S&P, SPX.X. That's how I get the S&P. We're looking at 2192.77, leg B, very strong. What a powerful move from the 2080, what was it, 82 or 83? 2083.79 low of the 4th of November. Powerful move. And look at this, 2193.82 starts a leg E/A to the upside in the weekly chart. I don't care about that. It's the monthly. I've been talking about this for a while. And one of the reasons why we are long in the Dow is that I'm expecting that the S&P and all the others are going to catch up. But meantime, we're almost there at leg C in the monthly chart of the S&P. Let's go to the IWM quickly. That's been the leader of the pack, stalling a little bit up 13 cents at 131.10. I would not be shorting this unless you're a day trader. That MACD and the stochastic, I'll be teaching that in my webinar. What's so important about the stochastic holding the 96%? What's so important about the MACD expanding with the histogram, the vertical bars still expanding? And look at the weekly chart. Yep, right at resistance. So we might be seeing some resistance here. That's fine. Brand new leg B in the monthly chart. I'm very positive. QQQs were stalling a little bit. Today they are catching up. Like they're leading up 0.80%, 118.26 up 96%. And let me just move this away so I don't lose track of time. That is very strong. What I'd say to subscribers this morning, you need 118.39 to really start leg B. And the high so far today is 113.36. Another 3 cents of this particular bar, and we'll be 3 cents, and we'll be in leg B. And the weekly chart is improving, but it's been stuck in a rectangle formation. Quickly, we'll go to gold. Gold is up about $5 at 12.13. I didn't see all that much. I had a lot of questions about it. I had a lot of questions myself about it, and I'll tell you why. I think gold could have a little bit of a bounce here as the dollar takes a breather. The dollar's had a spectacular move. It's down 35 cents at 100.86. But look at this. I mean, it deserves a little bit of a breather. And during this breather, yeah, maybe bonds can rally a little bit. The TLT is at 121.09, up 0.25. That's really nothing. And the GLD is at this point, it's up 54, 115.69. I don't see anything here yet. I think we will later on, maybe in January, but not just yet. Maybe even December, I'm not sure, when the dollar takes a big breather. So let's do the crude oil as we're about to go to a break. Crude oil is up $1.55 at 47.91. And I've been saying that I think that the 47.90s to the 48.20s should be resistance as it's in a trading band. But this is actually very good action. Look at the USO. This is very nice. And that, I think, is helping the market somewhat. USOs and leg B as well. I'll be right back. Basil Chapman, Tiger.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're looking at Dow up 49, S&P is up 11 at 2193. You got the comp index up 32 at 54, and that VIX index is down at 1282. And that to me is really important. In the below the teens is buying pressure, and you're seeing that constantly come in. And I would think that because of this, the vertical move in so many of the indices, that a lot of people either that were short going into the election are just dumbfounded and are have no clue whether or not they should be covering here or adding to the shorts. And if they did cover the shorts, they haven't really gone long. It's very confusing to anyone who wasn't in position. And I know for us that I've had some fantastic picks, and they just have gotten away. Some of them, not all. And you don't want to jump in. We jumped in on a particular stock today. Almost at the closing price of the other day, because I just felt so strongly that this one has turned the corner. You remember we once had a stock called Rite Aid, and we had it for years. We had just kept buying and buying. And I think that this one might have turned the corner, that it could become something like that. I don't know. But, we'll see what happens. So we've had a starter position, and we'll add to the position on a pullback. That's just the way it is. Now, I'm looking at SCO, which is the ProShares Ultra Short. Bloomberg, this is the crude oil ETN. Remember I spoke about those Ds? Look at this peak D in the daily. And look at the sharp pullback from the 101 area to the 81 area where it is right now. Look at the weekly chart. It went to 243.67. And it's trading now at 81. That was a peak D. The monthly charts on ETFs sometimes, because or the ETNs on the inverted ETFs or ETNs, sometimes don't work out. And this one went to a C, and that's just how it is. But look at the other ones, worked out beautifully. Okay, so what we're looking at here, let me just get back to this for a second. I put that arch pattern in. This arch should go. This could be what we call an inside buy mode. If I go to the 2-minute chart, and that's how I like to look at charts, that you're looking at time frames. One of my webinars will be to talk about time frames. The final one will be to put the whole thing together so that you can see how I'll actually be doing it in between as well. But that'll be the one that really specializes in looking at how you can put time frames. Here's the 2-minute chart. Look, peak E, getting a little toppy, but still quite strong. The 9-period moving average is at 2190.08. This is trading. It does know about quarter-point increments, so it's giving you that as if it was the cash. But what's even more important is if you go to and that says that it's still in a buy mode, getting a little toppy. But if you go to the cash index, look at that beautiful single leg A, pulls back, doesn't take out a 50% retracement, holds it, and now it's doing this little double top thing. And it's in a single leg A up, which means that the power to the peak A, initial peak A, from the 2180 low to the 2193's high, 2193.72 high, and then the pullback this morning to the 21, I'll tell you right now what it is, 86 something, is it? 2187.66 level. This is saying we've got the Chapman wave in my book, CD book called Introducing the Chapman Wave Methodology. I call this a drop bucket pattern. And now we're going to see whether or not there's a pullback from this level. If the E-mini breaks 2191, there's a good chance it's going to retest this low of 2187. If it takes out very quickly the high that was made on the left side of 2193.72. This is the cash. Remember, this is cash. So 2193.72. If it gets to 2194 something, besides the fact that that's going to be really important in my monthly chart of the S&P. If it does that, then you've got something that I call a Chapman wave. This is right here. What you're looking at is a cup and ladle breakout. That's way more important than a cup and handle. Okay, enough with these little technicals. Let's get to nitty-gritty. A question about Twilio, TWLO. I've taken it off my list. Probably shouldn't have taken it off my list because when I looked at it last, it had made a bottom and it was trying very hard to go higher. Let's see, Twilio. Yeah, it's in leg C. Very nice. Very good action. There's another stock that I featured for my Traders Corner that we actually got today. Started a position in because it had the same characteristic. So Twilio trading up $1.55 at 38.41. Twilio is a cloud communications. This is not great. I would not put this into the great category. I would just say it's acting very well. That was the question in the den. If you are long below, let's say you were long in the 32 area and it's a 33 area and it's a 38, 39, some part of your position you can just put a stop at 35.40, the 9-period moving average, and move that up. Keep your core position right now because the way it's acting, it should go to a peak D. And visually, I'd say that the gap at 43.10, that gap down on the 21st of October, would be a target. It might be a little high. I would just say 41.20 first, and then we can talk about something else. But I love the technique that we're looking at. The stochastic is at 83%. That's good. The MACD is rallying. The on-balance volume is lagging. I would prefer to see that higher. That's the blue line. So the weekly chart is terrible, and the monthly chart is really horrible. So all I can say is you're looking for 41-ish S&P in the den. I would say at 41, take off part of your position, but try to keep another part of that position because, in fact, take off a half and keep a half. Because rather than take the whole thing, and that other half, I would then tighten the stop, and I'll tell you why. Because at 35.39, the 9-period moving average, if it gets taken out in the next 2 days, that's on the downside, then it's making an arch formation. It probably might not even make a D. So that's kind of the way I'd be looking at it. Hope that helps you, and thank you. Question about, isn't that funny? I love it when I get disparate, same question from disparate mediums. Here's an email that asks about BZH and the HGX and the TYX. Very good questions because that's the humble of this. I had an IM that said, hey, can you look at BZH and Toll? So let's do that. BZH is, in fact, Visa Homes had a very powerful move off the about 930 something, and it's gone to a high today of 1357. That's a big percentage move, and this is a leg B, and now it's pulling back very sharply intraday. But what I'm looking at, and I looked at this, and the reason why I didn't jump into these is because of both interest rates rising. It is going to have some impact. It's still rates are still so low. I mean, for some of us who, bought houses in the 1980s, this is nothing. So what we're looking at here is BZH at 1292. Nice action. If you're in it, I'm just going to say, watch $12.07. That's the 9-period moving average. It shouldn't actually. This move should not come down below 1253 to 1247. In fact, it shouldn't even get there, but if it does, I'd be a little bit careful. But this is a leg B in the daily, and I really have to put an up arrow. The MACD's at 90%. Everything's good. So I would take a position somewhere in the 1250s with maybe a 40-cent stop. Keep it fairly tight, and then I'd be looking for a leg C. So I hope that helps you. The weekly charts, be a little careful when this is done, because we could have a consolidation. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 46. S&P's up 11. I'll be right back straight off these important lists.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and Dow's up 43, S&P's up 10. Now let's just go to the BZH again. So BZH on the monthly basis is starting to improve. but it really hasn't been a leader. And with these interest rates, you have to question, exactly what's going to happen here. Look at tolls being a little bit choppier. I wouldn't look at toll. I'd rather look at Visa. I think it's looking much more constructive. They must be doing something better than Toll Brothers. If you look at the HGX is trading. Oh, I didn't finish the notation here. 239.90, 230. Okay, 233.90. Okay, so here we go. This is an up. This is a buy mode in the HGX. I did this the other day, last week. We spent a little time on it. I'll do it again now. A, B. This is leg C, leg A, and E/B in the monthly. Let me just put it this way: that the home builders are holding okay, and that the last rally since the election results came in from the 220s to the 240s, trading at 238 right now. It's been a very big move, especially when you consider that a lot, even Fisher's talking a lot now about the right thing to do is to raise rates. I'm just wondering about this in terms of, if I look at patterns, I've got this pattern that I call the Chapman wave falling axis, merely an expanding cone. Either it's a channel or it's an expanding cone to the downside. And if it breaks to the upside consistently above the trend line, resistance, in this case, I'm looking at the weekly chart of the Philadelphia Housing Sector Index, that should become support. The technicals are not suggesting that it's going to go very much higher right now without a little bit more of a consolidation. So I'm just going to say that in terms of the housing, I looked at this closely over the weekend. I'm just kind of stalling here. I want to see what the result is. I had identified a stock today that is directly related to REITs in the housing, but the mortgage part of it. And I thought, oh man, this is going to collapse. When I looked and saw what it did, I couldn't believe that it was doing so well. And I wanted a pullback. I'd said to subscribers, I'll wait for a pullback. Pullback? Are you kidding me? This thing gapped up and is up 1.57%. I wouldn't have got it because I would have wanted at least the closing price on Friday. 3 huge candles to the upside, and it's based on getting on rates. So I'm going to say that my thinking here is that because of the new administration, that they might just have no choice but to say, we can't do this before a new administration comes in. We need to have that person look at all the things going on. We need to discuss it, even though the Fed is independent, of the president's whim. And maybe it's January that we do it. Something a little weird is going to go on there. So, okay, HGX, I've done that. Next thing is JetBlue. A question about JetBlue. JetBlue? I haven't been on JetBlue for a little while, but I always enjoy JetBlue. They're actually not as funny as they used to be, which is just as well. I didn't think the jokes were all that great, but they did have a nice personality, and the seats were very comfortable. So this is JetBlue trading down 3 cents at 2070. Leg C in the Chapman Wave daily chart. Leg D in the weekly. See, we're getting a number of Ds in the weekly chart, which is suggesting to me in this rotational aspect that come next week, not this week, but next week, we might see we'll see some kind of a pullback. If I'm correct on the dollar, and this is going to be real. So JetBlue, let me just finish that up by going to the XAL. The XAL is in leg E. That's the most conservative that I can count it right now. I could say it's an instant restart. Leg E in the daily, but leg E in the weekly, and a fantastic move in the monthly chart. And that monthly chart at 105.13 needs to break above 108.16 to start a confirmation of a monthly buy mode. Actually, it's already in a buy mode, but to confirm it, I need a new all-time high above 108.16. Very good action. So here we go. That was that. Let me just double check. I did that. Okay, and the IYT I haven't done. I usually do those together. IYT, yep, same thing. A little doji candle, maybe a leg E. Now, this is going to be very interesting. How does this market, because the volumes in this get lighter and lighter. Tomorrow will be light, Wednesday will be really light, and Friday will be non-existent maybe, unless there's some news. And this is going to be very interesting. Question. Terry asked, folks rushing to get mortgages to buy homes before rates go high. I haven't heard that. I mean, I'm sort of in touch with someone who does that. They haven't. I thought that was the case, and they said not really yet. It's just been about the same as it has been for a while. So this is going to be a very interesting question about people rushing to get their mortgages before the rates go up. The rates are still really low. We're talking about some of us who have experienced a period where rates were up in the high teens. I mean, can you believe it? But then inflation in the 1970s was also extreme, very high inflation. Okay, so that I think I've covered a bunch of things there. Yeah, now this is a good question. What happens after 11 up closes? The IWM is trading at 131.03. The IWB, and the IWB is the Russell 1000, is trading in leg C. It made a new recovery high, so this is F/A. None of this looks like an F, but I'm going to put this F/A because in the Chapman wave, we always like to be a little conservative initially, and then we get confirmation. It's a very easy thing to do. And here's the other thing. Leg C in the monthly, and the IWC, this is the microcaps. This is the iShares Microcap ETF. Let's see. Yeah, leg B in the daily. And I'm calling this leg A with a brand new buy. I mean, I don't know what to call it because I shouldn't actually do that. I shouldn't put that up arrow. No, I'm going to be as conservative as always. I'm just going to put this in as a plus. I don't want to overreach. The technique says that once you break out after peak F sell mode and you break to a new high, there's a really good chance that that is not going to be, if it's this strong, it's not going to be an inverted V shape with the little carrot on top. That would be a secondary sell signal. This really looks strong, and it looks to me like they are benefiting from this particular environment right now. Not only that, there's this particular characteristic that I meant to spend a little time on over the weekend to discuss, but I didn't. I'll do it for subscribers tomorrow, I hope I remember, to explain why this could be a really strong move in the daily charts. They should all go to Ds. Okay, all right. I'm covering something here that I always do, but I'm going to ask the question. The Dow's up 50, only up 0.26. The S&P is up 0.51 at up 11. The IWM and the others are now at just giving back for the first time. And as the questioner said, 11 days, what happens? Well, 11 days, you're close to some kind of a pullback. It's like flipping a coin, except there's a big difference in the stock market. You absolutely know that you're not flipping a coin expecting 50, 60, 70. The probability that it will happen is very, very unlikely. But it can happen that you can flip a coin and go, I know I've done 21 times, I think, years ago with my kids. Now, of course, they're not kids, so I haven't done it. I'll try it with my grandkids over the weekend. See how many times we can get heads or tails successively. But the stock market's not like that. It always gives back. 11 sessions is a lot. It shouldn't go too many days more without some kind of a give back. VIX index at 1285 after the peak F top. I tell you, this is a very interesting market. Basil Chapman, I'll be back straight after these important messages. Dow's down. No, Dow's up 48, S&P's up 11.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. So we're looking at the MDY. That's the S&P Mid-Cap Depository Receipts. Leg C in the monthly. This is a really powerful monthly leg C. Leg G/A in the weekly, everything about it says that you could get a pullback and there's some choppy action going to maybe a B, C, and a D. I'm just going to say that's the way it looks right now. But look at this. This is leg A. This has gone from, I wish I'd followed this a little earlier, from the low of 268.25 on the 4th of November with a gap, and then it goes A. Remember, this is called the floating letter in the Chapman wave methodology. So that's leg A, leg A, leg A, leg A, leg A, leg A, leg A. Right up, I want to just double check that there was a new high, 290.84, 298.92. So not a single peak yet. I think tomorrow will be a peak based on this little doji action, yesterday, Friday's doji, and today's spike with the, we're at the lower part of the candle right now. But the MACD is so powerful. The stochastics at 97%. I'm looking at this, and I think this will go to, it doesn't, the major part of the up thrust has been done. I would say that it could pull back to 288 over the next week or so. But if that's the case, then you would do a 1-to-1 to the upside. This could go to the 297.80 to 298.60 area over a period of a couple of weeks. We'll see. Okay, so that's very nice action. Most importantly is I had some questions about, let's say, rally post-presidential election. What wave count from 2012 or 2008 rally like now? Okay, so good question. A little convoluted answer, but I'll give it to you. Look, if you're looking at, you're looking at crude oil, huh? No, you're looking at the market. If you're looking at the Dow, this is a very interesting phenomenon because it's already in leg D. None of the other indices are in leg D. They're all in C's or B's. That's saying to me that the Dow will probably go to E and an F. Well, if you're talking E and F, that takes you to February, March, okay? Just on a very strict up-down basis, because it'll take the whole of December to make peak D, the whole of January to go to a leg E, and then the whole of March, February, January, February, and then you got your leg D, leg F, and that could recycle. We don't know if it's that quick. It could even be a recycle. in the monthly. If it does that in the monthly, that is extremely powerful. Look at this, almost recycled there. That was very powerful. So all I can say is, yes, I think we're going to rally. Then there's a good question, which a couple of people have sent, once again, from absolute diverse sources. One is completely does nothing with the tiger, anything. This is just someone I'd met somewhere else, and sent me this thing talking about almost the same thing. So yeah, you got. The question is, crude oil. Do you see a rally into 120.17? Seeing dollar call USO. Seeing the buying of calls, 1150 calls, very heavy buying. You know, I'm going to do this. I'm going to say two things. One is, I like to go step by step. And all I can say is at this particular point, I think we only have one short, and that short's down 26%. And it's even now it's down 6 cents when it should be up. So I'm mostly looking at longs. And all I can say is that at this particular, at this stage, I want to see two things. I'll do it right now. Let's go back to the QQQs. If the QQQ series is able by Wednesday to be trading close to 119, that's going to say to me that the rectangle formation in the weekly chart has consolidated sideways, something that I've spoken about for a while. And if I see the RTH, it's three things. The RTH index, which is in leg D right now, but still acting pretty darn well at 77.69. This is the S&P market vectors retail ETF. I need to see this, especially since we're coming into December already. I mean, this is a holiday. The buyings are done. Now you're waiting for the retail stores, the figures. So I don't want to be looking at the products that are made. I want to be looking at the products that are sold. And I think that the RTH is going to be the big clue, because the weekly chart says it's not going to make a new high at 81.71. 81.70 was the peak E high. And then it's going to rally and then probably fail. And that's the reason why I've been talking about Amazon and saying Amazon chart looks, they're actually quite similar. The RTH, it's never done that. This is the first time we're looking at the online, the greatest online marketer and sales vehicle ever, Amazon. And it's up 15 points right now, but that means it's up 1.97%. So 775, it's like going from 75 to 77. So all I can say is that, actually 76 to 77.50. All I can say is that this action in Amazon is suggesting to me that we are looking at a situation that says maybe the sales this year are not going to be, people could be spent out because you know that they were buying cars, they've been buying houses, they've been buying a lot of big stuff. And I'm looking at these flyers, and the flyers are giving really good deals on refrigerators and ovens and TVs and all. So the big stuff, it might just turn out that this season, holiday season, Hanukkah, Christmas, whatever else you have, is going to be a little bit weaker than we saw last year. And that's just what I'm looking at. So now if I look at a question here is the TNX, has it stopped going up? Yeah, has it stopped going up? Because it's in leg E right now, 2279.83. Okay, so we're trading, the high today is lower than the high of Friday of 23.55. Oh man, that is such a good question. And all I can say is that from the chart formation, there could be a high level consolidation, but I don't see the TNX breaking down just yet. It is just too big a move. There are still too many people caught short. That's number one. And also I'm looking at tremendous support between 23.24 where it is now. So let's call under 24 to round about between 21.80 and 21. There's a tremendous amount of support. So the answer is it might stall here. You know, rates can do that. They can just go sideways, even sideways to a little bit down. But that's not really helping. Look, if I go to the TBT, leg D, peak D possible, the MACD is good, stochastics at 93%. I just think from this chart pattern that rates are going to hold quite well in this area. And that's going to be a little bit of a surprise because every other time they've rallied sharply, they've also come down very quickly. This time, I'm not sure that they're going to do that, not with talk of interest rates rallying. You know that Trump kept talking about, saying rates at this level, it's ridiculous. I think that the meaning was that it incurs that if you want to have economic expansion, you need to see rates move. And if you want to see an expansion in employment, you want to see better jobs. And better jobs, we're not looking at, we want to see companies wanting to buy and pay up for interest rates because they're so excited about projects that they're going to do. I think that's maybe the way that one would have to look at it. So question to Dan about the SPY. SPY is the same thing. SPY is in leg C. 2190 to 1968. Oh my goodness! Thank you very much. The SPY just went to 2119.68. It's in leg C in the monthly chart. Another confirmation. Woohoo! I'll be back. Basil Chapman, Tiger Technicians Hour.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, during the break, I must have moved like 10 different places here, so let me just do this. There's that pattern. Remember I said there's a chance if we get to the top here, and then we start a little bit of a pullback. Oh, look at that. This is a leg E. Yep, this is a leg E/B. Buying doesn't let up, does it? E/B. All right, and I'll make it real clear. Above 2192.50. This will go to a C and a D in the daily, in the 10-minute chart, and any pullback from here under 21 is at 2190.75 10-minute. Any pullback under 2188 in the next hour says, okay, that's pretty much done, and now we're just going to have a bit of a rest. Question I had about BIP, Brookfield infrastructure partners, trading at 32.28, up 6 cents. Since it's an infrastructure play, what do I think? Well, I don't know how to count this monthly chart. The only way I can, if I'm very strict in my Chapman wave notation, which I usually am, I have to call this a peak A. Now, peak A's can fail, but when it's this strong, I'm looking at it and I'm saying, okay, it looks good. It might need a little bit of time. In the weekly chart, I'm going to call it a G star rather than G slash, whoops, sneeze, a G slash C. But what I did say is that in this particular person's case, who likes to start positions, is not afraid to start positions early, saying, I love it, I like it, it's got whatever it is, it looks more positive than negative. So it starts as a small position and then adds to it. In this case, I said at 30, I didn't say it exactly like this, but I said 32.28, you could start to nibble here. I did leave out an E and made it sound a little weird here. And but I really would like to see how it tests the 31s. But regardless, it needs within by the second week of December, it has to be trading comfortably above 33.50. When I say comfortably, it needs to have hung around there for a little while in the weekly chart. That would be the first really good sign. Right now, it looks to me like it needs a little bit of a rest, but yes, it's on the list if you want to look at infrastructure plays. Now, let's do a couple of things. Just let me show you this quickly here. I'm going to go to the front page of TFNN. Front page of TFNN shows you right here that if you want to learn some simple technical tools, remember I just showed you that peak D, look at that sharp pullback from the D and all the others that I've shown. Thank you, bless me. Yeah, thank you. I should have a shut-off button. I think it's on a different system. I don't have it on this. All right. So right here, simple technical tools to analyze charts, a 3-part course on the Chapman wave. Not only do you get my 3-part series, 1.5 hours, 3 1.5 sessions, December the 6th, 20th, and the 10th. They're archived. It shows you the techniques. We go from counting the waves and then to techniques where you don't have to count waves at all. You're just looking at trend lines, cup formations, arch formations, straight line, etc. Just technical tools, MACD, stochastic. How do you use that, etc. I'm really looking forward to it. It should be a very exciting webinar series. And not only that, you get my newsletter while you're doing this, so you can actually see the charts. You can experience the whole thing as we're doing them live every day. So that'll be there. So in the meantime, back at the ranch, let me just cover this one more time. If I show you this chart, you'll see exactly what we're looking at. This is the Downey's 18,935. This pattern says it doesn't have to go too high. It just needs to sneak above to get to that 35 level for leg C. And this is saying that a chunk of the Dow's move to the upside has probably just been completed right now, but we should still go to a leg C and a D. But you saw 11 days up, directly up in the IWM. And that MDY, 11 days without a break, just straight up, it's leg A instead of B, is extraordinary. And you will have to see what happens. So here we go. We've got the Dow, watching it closely. It's up 51. And stay tuned for all the other shows. The technical shows today should be wonderful. This is a great period to be looking at the technicals as well as what stocks could handle the next 2 months with the give or take of up and down. That's very important. All right. Have a great day. Check out my webinar coming up December the 6th, and I will be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.